You still describe inflation as very high,
Yeah.
although the CBG is taking some pat on the back from bringing it to, from over 18%, even down to single digits. I know that the Gambia's target is 5%. Was it 5% when you were there?
Yes.
It was always 5%.
5%.
What's the base? What's the history? What's the basis of this 5% inflation?
Inflation is always a disease. It is a disease.
But I hear it's good for every economy.
No. High inflation undermines economic growth.
Would you consider 5% high?
No, if 5 is okay. Based on so many studies have shown that inflation beyond 5%.
Okay. So we based ours on 5% based on these studies.
Realities, exactly. Okay. Realities of the economy.
Because there are countries that aim at 2%, in the
EU,
UK.
EU and others.
Exactly.
Yes, because they have reached a level where, unless if there is a major crisis and the base is low, then you start having inflation in economic growth of like 7% or so. But otherwise, if you look at their economic growth, are normally low 2% or so.
Okay, so our target is 5%.
Normally
when
5%.
You were becoming governor of the central bank, where was inflation at the time?
Inflation was above 9%. It was above 9%. So we brought it down to 5%.
And then COVID came.
COVID came, it did not affect inflation.
Oh, it did not?
No, inflation was 5%. We were very proactive during...
How did you do that? Because apparently, everybody's blaming COVID.
No, when I was at the bank, we weathered the storm. The COVID issue was almost over because, we acted quickly earlier. When people were doing the first dose, that was the second dose for the Central Bank of the Gambia. When I was leaving the bank, our monetary policy rate was 10%. When I came as governor, monetary policy rate was about 20%.
Oh, wow.
But, when we achieve inflation target, so I reduced the interest rate, we reduced the interest rate up to 10%. Our target was...
What made that possible?
Well, objective of the central bank should be clear, limited, and prioritized.
And before you became governor, the objective was not that clear?
No, it was clear.
Yeah.
If you look at the Central Bank Act, it says the primary object of the central bank is to achieve and maintain price stability.
Okay.
So if there is, a crisis situation, your focus will be to maintain price stability in the country. In fact, this is what central banks are able to do best. Focus on inflation, and so that inflation is low, you achieve price stability. High inflation creates uncertainty, undermines investment, and in that case, it undermines economic growth.
What I'm trying to get at is what made it possible for you to cut the MPR?
Because of one is discipline in the management of the bank is very important. If central bank, if you don't control money supply very well, you are going to run into price stability problem. It is well documented all over, and this is not something which economists are debating at this point. It tested and that too much money in the economy causes inflation. This is something which has been documented over and over, tested and proven over. In the 1930s, Federal Reserve reduced reserve requirement and poured money into the economy. It caused inflation. But after some time, they did a policy reversal to implement contraction in monetary policy. That also affected the credit markets. So it caused a lot of financial problems in the country. So it is well documented that too much money in the economy causes inflation. Now, during COVID, we took several policy measures. Now, one was that we reduced reserve requirement because the room was there. Inflation was 5%. We have exchange rate was stable, 51%, very stable. We also, so there was massive policy room for us to maneuver. Interest rate, we dropped it to 10%. So not only that, we increased money supply because inflation is low. That time, this American rice, bag of rice was 1,200 or so, and now it's 2,250 or somewhere around that. So this was one aspect. Because stability was achieved, there was a very big room, policy room. So we were able to expand policy to ensure that, within some period, the impact of corona will also be mitigated. The other thing we did was we were making a lot of profit as a central bank at the time. Yes, 2024, we made a profit of over $500 million.
2024 is only last year.
Yeah, in fact, 2020. No, not 2024. Yeah. 2019. Okay. Because I left in 2020.
Yes.
2019.
The year before COVID.
Before COVID, we made a profit of over $500 million. And that 2020, by September, at the time I was leaving the bank, I left a profit of over $300 million, even during COVID. And we had big Dallas reserves. So when COVID struck, that Dallas reserve also, we ensure that because there are legacy debts which government owed to the central bank, they are paying us interest. So whatever government was going to pay the central bank, we used the Dallas reserve and paid it on their behalf. So we freed resources in the budget. I think, if I can remember, close to 800 million money that they should have spent, pay interests, principals. We paid on their behalf. And then the other thing we did was IMF rapid credit facility. IMF lends to central banks. So they lend us, we gave the money to government. We transferred about 1.3 billion for government to have more resources to help our people.
Dallas or dollars?
Dallas. Okay. About $25 million. And the other thing we did was, central banks around the world, they suspended, they wrote banks to suspend debt payments, loan payments by their customers, and they would not be penalized because of the circumstance that everybody was in. For us in the Gambia here, we took a different approach. We took it on a case-by-case basis.